I'm Chris, welcome to Valley, and I've been waiting to do this one. All right, you open your renewal, you see the number, and your first thought is this makes no sense. Okay, I have the same trucks, I have the same drivers, I operate across the same routes, yet your semi-truck insurance quote just jumped
Oops.
again. Here's the truth most fleets, well, they never hear. High insurance quotes, well, they're usually earned. Okay, they're not random. And once you know what the insurers are reacting to specifically, you can start to pull the right levers in your favor.
Woo!
Let's break this down. Why are insurance prices rising across the industry in the first place? Okay, so before we talk about your specific operation, we got to zoom out a little bit, okay? Insurance costs are up everywhere in trucking. Nuclear verdicts, aggressive litigation, higher repair cost, expensive medical claims, okay? Fewer carriers willing to write trucking risks to begin with. According to ATRI, insurance costs and availability is now one of the top concerns in trucking. It's climbing fast as verdict sizes explode. Well, and that means that underwriters are nervous, okay? They're defensive and they're picky. See, they fear pricing first. But here's where it gets kind of a little personal, all right? The 5 biggest reasons your quote is high, let's get specific. Okay, most expensive quotes, okay? Well, they come from patterns that the insurers, well, they don't like, okay? Here are the biggest ones. Okay, your loss history is telling a bad story, okay? Not just big crashes, frequency. Frequency matters more than the severity of the accident in the first place. A handful of small claims, okay, mirror hits, backing incidents, roadside scrapes, well, they can quietly wreck your pricing. Insurers read this as more of a, okay, great, we got more coming, right? Even non-preventable claims still cost money to defend. Small claims still kill your rate. They just do. 5 small claims, well, again, they're gonna look worse than the 1 big one. Frequency is telling the insurers your operation is leaking daily risks. Okay, clean operations do not drip claims. They stop them. Number 2, your safety scores are working against you. CSA scores matter, basics matter, violations matter. Underwriters do not debate data queue explanations. They just don't. They price the number. You speed, okay? Following distance, HOS violations, vehicle maintenance issues, okay? They all start to stack up. High scores, well, they're gonna signal poor control, even if revenue on paper looks good. Number 3, operation doesn't match your policy. Okay, this is absolutely brutal. Okay, you haul different freight than last year. Okay, so what? Well, you added lanes. You hired newer drivers. You expanded faster than your paperwork tolerated. To insurers, this looks like a misrepresentation, even when it's completely accidental. Okay, mismatch equals distrust. Distrust, well, it equals higher premiums from the carrier. 3 red flags that insurers absolutely hate. Okay, unreported freight changes. New routes not disclosed. Driver experience drifting kind of downward. Any of these raises pricing quite literally instantly. Number 4, you're buying coverage blindly. Higher limits, okay? Well, they're not always smarter, okay? Lower deductibles are not always cheaper long term. Many fleets, they kind of overbuy the wrong things and underbuy the right ones. Bad structure is really what's costing more than bad rates. You know, if the policy does not fit your operation clearly, the insurers, well, they're gonna pad the price. Number 5, you're not shopping the number, you're shopping the narrative. This one stinks. If your submission looks generic, it looks rushed, okay, it looks incomplete, you'll get generic pricing. Underwriters, well, they're gonna reward that clarity and they're gonna punish the uncertainty. Most fleets, well, they send the data, okay? Very few tell a risk story. Insurers don't price the trucks, they price trust. If your operation feels controlled, it feels documented, it feels disciplined, well, you're gonna pay less, okay? If it feels chaotic and crazy, okay, you fund that anxiety. What you can actually do to lower your quote, okay, now the good part, here's what you're around for, okay? Here's what moves the needle in your favor with respect to pricing. First, clean up claim frequency. We can't have this bum, 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 bum. Okay, stop the bleed. Please, whatever you do, stop the bleed. Backup training. Huge cost of claims. Yard procedures, okay? Incident reporting discipline. What do you do after an accident? Minor damage prevention. Okay, let's look at that. Fewer claims, really, it beats better excuses, I promise, long term. Second, this is big. Okay, attacked safety scores proactively. What does that mean? Well, audit any violations that you have monthly. Look at them. Data queue, what can you fix? Okay, fix these patterns, not the paperwork, okay? One bad basic score, okay, it can cost you literally more than a new trailer in terms of rate. One monthly review, well, it can save you 6 figures depending on how big your operation is. Okay, 30 minutes a month, that's like no big deal. Spend 30 minutes reviewing violations that can prevent literally years of inflated premiums you're gonna pay down the line. This cheap discipline, well, it's gonna beat this expensive renewal every time. Third, align your policy with reality. Update the freight types. Please update your commodities. Confirm the lanes. Verify driver rosters. Huge. Please do this. Okay. Never let underwriting, please, whatever you do, never let underwriting discover these changes before you disclose them. That looks terrible. Fourth, restructure. What do I mean restructure? Don't just requote your limits, okay? Look at your deductibles, your retentions, layering. Sometimes the fix is not necessarily cheaper insurance. Sounds crazy, right? It's smarter insurance. Fifth, control the narrative. You're the boss, okay? A strong submission to this insurance company, okay, well, it's gonna explain a couple things. It's gonna explain how you hire. What do your hiring practices look like? How do you train? What does that look like? Do you have manuals? How you monitor the risk? How you respond? How you respond to incidents should they happen? These things all add up. Okay, this turns you from a file, okay, a file number, really to a managed operation. It makes you look really good. Why this matters more than ever. Simple. It's really simple. Insurance isn't, it's no longer a kind of a background expense, okay? It affects cash flow, contracts, growth, survival, okay, for that matter. High premiums are not just a cost, they're kind of a signal, if you will, a beacon. Ignore them before you keep paying more. Decode them and you gain leverage. Final thought, your insurance quote is not punishing you randomly. It is reacting to what it sees. Change what it sees, and the price follows. Thanks for watching. See you next time.